Welcome back. If you're just joining us, you're watching CNBC Africa's MPC special broadcast. Now let's unpack the outcome of today's meeting. I will still have in the studio with us Nnamdi Nwizu, co-managing partner, Comercio Partners, Bismarck Rewane, CEO of Financial Derivatives, and Kubi Momoh, chairman, Cititrust Asset Management Limited, here with us, of course, to unpack the outcome. Thank you so much for your time and your patience so far. Let me start with you, Nnamdi. Key takeaways from you. The CBN governor says, yes, inflation continues to climb, but we will continue to fight it.
I mean, the way he sounds, I had expected a bit more tightening anyway, but from the way he sounded and from decisions taken, it almost sounds as if we should expect them to stop hiking very soon and start to watch. So, first of all, talked about the fact that there's a lag between increase in rates and when we start to see the effect.
Right.
So that points to, and the fact that they did just a 25 basis points, points to the fact that we might be close to the end of the tightening, season, unless something drastic happens or we see some big spike somewhere else. They talked about, being able to grow a healthy buffer, which also interesting once again, and talked about, capital inflows that are coming in. They're pretty happy with the numbers. And the fact that, what has happened today, what we've seen happening is not unusual. So it's almost like they expected it to happen, they expected rates to get where they are, they expected tightening to get.
I'm not sure you expected for the inflation, all three aspects of it.
Well, they talked about looking at other countries and seeing what other countries went through. So basically go and check other countries, and earlier I mentioned people like Ghana, Egypt,
right,
and the inflation spike and then the central bank rate spiked. So it's almost as if, well, look, we expected to see an increase, we expected to see a depreciation of the currency, it's happened, but they're on the right track. So I would expect that we're almost at the peak of the tightening. If they do anything else, maybe another symbolic 25 basis points or so, in the near future.
Right. Kubi, you said you weren't expecting anything earth-shattering, nothing too drastic. And so was that 25%, 25 basis?
Right. 50. We said, I think Bismarck and I were in agreement that they would either hold or tighten a little bit more. So maybe a bit softer than we had expected. And one of the things we had said earlier also was that towards the end of the year, you don't want to rock any boats. You want to see, to make sure that the decisions you've taken before are working.
Right.
And I think the governor alluded to that when he said it would take a while, that you take decisions, that there's a lag period for them to, for you to see the effects. And in terms of inflation, I think also, again, we had said that you had the subsidy removed, the fuel subsidy. So that inflationary effect, of course, you were always going to see it this year. So those hard decisions, that has happened. The currency, the major currency devaluation that happened in 2023, we continue to see the effect. But again, the central bank governor also said that one of the key issues for the currency is stability. And we've had that stability for a while. Touch wood, no extraneous shocks. We should have stability into 2025. And part of that is the buffer we have now from the reserves. You have a healthy reserves number. I don't know when last we had 40 billion. It's probably a couple of years ago. I don't have the exact month. So that is some sort of comfort. We're not paying back any of our foreign currency bonds until much later in the year. So we have a full year from now before we're talking about major outflows in terms of bond maturities. Again, because it's always a balancing act, maybe one of the things the central bank is looking at now is the effect on debts, the debt payments. So you don't want to hike your rates any significantly higher than where they are because, of course, there's always that to think about, the cost of debt service.
There's always debt service.
Yes, there's always debt service.
Bismarck, key takeaways for you. What comments stood out?
A statement, of course. We manage the stability of the currency and also look at the value of the currency. He clearly differentiated between the two. One is about stability and one is about value. That what they are more concerned about is the stability of the currency rather than the value of the currency. One. Two, he talked about the fact that the monthly inflation, the three measures of monthly inflation all increased, even though the headline inflation, core inflation, and the non-food basket annually actually slowed, but the monthly inflation increases pointed to the fact that there are signs that inflation is not being tamed fully. So that's one. Three is the fact that he alluded to the fact that first quarter 2025 would be when he thinks that we begin to turn the corner. Why did he say that? He said that principally because it was in February last year that the currency got all the way to 1910. Because it was in February that they increased the interest rate for the first time, February 2023.
Right.
That's when they went up by 400 basis points. So February, if you're taking the base effects, the currency fell to its lowest value in February last year. If you use that and you take February this year, those effects would have worn out, and therefore you are likely to begin to see the currency appreciate mildly, not totally to where it was. So I see those three things. One, monitoring the monthly inflation, which is more current. Two, the fact that it's looking at the difference between the stability of the currency and the value of the currency. And three, looking at where the base effects begin to kick in, because they had peaked at in 2023 and now begin to appreciate. So I remain, again, cautiously optimistic.
Right.
I think that they have a clear idea of what the limitations of monetary policy as a tool for achieving macroeconomic stability, and everything now depends on how the markets believe them. And he said about the transmission lags,
right,
which I don't agree with him, because the lags he mentioned were too long. I think the lags are going to be much shorter.
Much shorter.
Because we are closer to equilibrium.
All right, and I'm speaking about the markets. What does this, where do yields go from here? How are the markets going to interpret this decision? I was just looking at the budget plans for next year. Obviously, significantly bigger budget than we've had in the past. There's a plan to go to the Eurobond market also, external borrowing also. But it looks like the National Assembly appears to be on the same page, but that's another conversation. Talk to us about market reaction. What are you seeing next year in terms of our debt, yields for foreign investors, etc.?
Well, I think, first of all, if they pause on tightening or really slow down, then we'll see yields naturally start to stabilize. We saw the last bond auction, the 2031 bond got to 22%. Highest on record. I've been trading in the market for over 20 years, and I've never seen yields, anywhere close to that. So, for all of us in the market, right now, it's basically uncharted waters, right? But the good thing is, I think markets expected a bit of a higher type of tightening, right? So this would signal a lot better to the markets. I expect to see people stop to sell off bonds and possibly even see a bit of price appreciation on bonds. Yields maybe come down slightly. On the currency, the sounded pretty optimistic, talks about stability in the currency. So FX, I don't expect rates to start to move aggressively anymore on the FX side. Also a bit of stability. Like Bismarck said, big question on whether people, how people even outside Nigeria start to react. Do you start to see more flows coming in? Do Nigerians start to believe that we're truly, getting to the end of the pain? And that people will stop converting naira to dollars. People will now start looking at bringing in their currency. The base effect, if it kicks in February, market will be looking at that. If inflation starts to inch down, then people would expect that somewhere, maybe by end of H1, that central bank might start to,
lots of ifs.
Yeah, that's all you can do, really.
I'm interested in hearing how foreign investors would interpret the outcome of today's meeting. It hasn't been a bad year for them when it comes to the treasury auctions and all of that, but how do you see them interpreting this?
Okay, so it goes back to stability, and which is key in terms of where do we think rates will move over the next 1 year. So again, because we've had a significant devaluation, that means outlook for 2025 is pretty good. Yields are pretty high. If you take the actual yields, interest rates may be 22 or 23, but for a discounted value instrument, the yields obviously higher. So you're looking at yields at about 30%. Do you think the currency is going to devalue 30%? All things being equal, no. If anything, if you take what Bismarck has said, you should see a mild appreciation. So the tendency we would expect would be for international investors to say, okay, I may have instruments maturing January, February, March of 2025. We may see some level of rollovers, which means we won't have pressure on the currency,
right.
Over the next few months, and that's very good for us because it means you're not, you're not winding down your reserves. And again, looking at those reserve numbers, we have a war chest at the moment, so you're kind of comfortable that yes, you can defend the currency, you can meet up with imports. I think the Serbian governor said 17 months of imports is what we have, and that's also good for planning in terms of importers planning and for our foreign investors being stable over the next 12 months. So I think we are cautiously optimistic for 2025.
All right, Bismarck, I wanted to talk to you about growth. I mean, latest GDP figure printing at 3.4%. Now, going into 2025, like I mentioned to Nnamdi, we have a bigger budget size this time, so obviously we're going to borrow more. There's a plan to go to the Eurobond market. I was speaking to an analyst, I believe, a few days ago, and he says that, look, rates are not bad where they are. I guess it also depends on when you go into the market, but he doesn't see like a high double-digit interest rates for Nigeria, for the Eurobond. But what are your thoughts in terms of how yes, the government says there is momentum, fiscal authorities, monetary authorities say there is momentum now for the economy, but talk to us about where you see growth next year with the budget and all.
First and foremost, I think that growth will stabilize at about the same levels as they are this year.
Right.
I think that there's a change in the equation. With Donald Trump coming in, right, and the value of the dollar and the price of oil going in the other direction, I think that we might be challenged in terms of how much oil revenue we're going to extract from the oil. But there are various things that are happening at the same time. One being that, the Dangote refinery has come in and the price of petrol actually has been reduced. Nominal price has reduced. He did talk about the fact that he felt that the prices of that inflation will stabilize, like we said earlier on. The initial reaction of the market today was that the parallel market actually depreciated to 1770 because people are not so clear, right? And so when you build in the global uncertainties into the domestic lack of clarity, and then the budget, by the way, in dollar terms, the budget amount actually declined compared to the previous year. It's quite clear to us and the markets that there is sanity in the monetary policy space in Nigeria. There's clarity and also sanity. In the fiscal space, there's a little bit of, I would say, there's a little bit of eccentricity in terms of we're not too sure what the policy statements are and what the effects are going to be. So to the extent that there's a global uncertainty, there is some monetary policy sanity in Nigeria and fiscal response system. I would say that 2025 is going to be a very interesting year. I think that will eke out some growth. I think that Nigeria will make some very, very hard decisions in terms of institutional reform.
Right.
Nigeria also makes some very bold decisions in terms of going to the markets, not just the commercial markets, but I think that Nigeria will engage in a kind of frenemy discussions with the IMF. So.
All right, we have 3 minutes left. Let me see how we can quickly use that up. Nnamdi, for businesses, how can businesses, how should they process this? And one question they always ask is, can we plan with the exchange rate, with the reforms? Can we plan? What should they look for in 2025?
With exchange rates, I think they can plan. I think if you're looking at maybe if you have a 5 to 10% max depreciation in the currency, that is pretty good for people to plan with. Right, so I think that looking at the numbers now, people can start to plan and say, look, next year, worst case, maybe we'll get to 1,008 something, 1,900, if things don't work out. If it does pan out, like everyone has said here earlier, then maybe we'll see the currency appreciate a little bit. I think people can start to plan now on the currency.
But it's better for them to err on the side of caution.
Well, yes, it is. So, which is why I said 5-10% worst case, right?
But still back to the if.
Yes. Well, you cannot.
Kubi.
Okay, so for next year, I said cautious optimism. The one major risk I do see is from the budget. So We need the tax reforms to pick in so that government revenue is a bit stronger. Otherwise, that deficit that we're seeing, some of it we're still seeing already in 2024. We're going to see a bit more of that in 2025. I believe
there was a 2.2 million loan that was just approved by the National Assembly.
Yeah. So again, those are some, I don't know whether to call them headwinds, but we'll look at those and see what the impacts will be, because I think sometimes that affects liquidity and that also affects, of course, where we are in terms of exchange rate. So that might be the one factor we're looking at on the fiscal, how the fiscal and the monetary policies interact with each other.
All right. I'm afraid that's all the time we have, Bismarck. Thank you. We do have you regularly on our live shows, so we'll have our conversation at some other time. Thank you so much. Thank you, Nnamdi. Thank you for your time. Well, that's all for today's coverage of Nigeria's MPC meeting. A big thank you to my guests today, Nnamdi Nwizu, Co-Managing Partner, Comercio Partners, Bismarck Rewane, CEO of Financial Derivatives, and Kubi Momoh, Chairman, Cititrust Asset Management Limited. Thank you also our viewers for being with us today. We appreciate your time. And for myself and the team, it's bye for now.